Happy Friday, traders. It's 8:01 a.m. Chicago time on the 29th of June, 2018. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, allocation is slightly to risk. We see the DAX and the Euro stocks leading the market. The DAX is up 156 points, 1.28%. Lots of numbers from the Eurozone this morning. The S&P is up 7.75 points. This is basically the opposite of what we had yesterday on the open, or during the trader bite. The S&P was down 8 points. Gold is up. The laggard today is the U.S. dollar, the bund, and the Japanese yen. So again, this morning, allocation to risk, seeing positive across the board. Even the bonds are up 10 ticks, 0.22%, and the Treasury notes, the 10 years, are up 2 ticks this morning. So that's how we're set up. Let's take a look at what was expected yesterday. So yesterday, the key play was responsive, was looking for a... While we were doing a trader bite, we were actually looking at an open auction out of range. What we ended up doing, though, is we ended up opening in range. We ended up opening up here, 2701, in range of Wednesday. But overall, we did get the test below. We didn't really get very deep on the test below. And then we ended up pushing higher, much higher than I expected. We actually ended up pushing yesterday all the way up to the low volume node, the key low volume node, in between these two distributions from Wednesday. Good volume yesterday. You might have noticed some really strong swings both ways. Those of you who are part of Convergent, if you go to the notices board, you'll see an impromptu that we did yesterday describing this action and how it looked on the order flow. But overall, we did end up being responsive yesterday after battling below Wednesday's low. So we extended this impulse day down, consolidate, and we managed to retest on Wednesday, and then we finally extended this down, and then we are corrective now. We're kind of in a corrective phase. Looking for 2738, likely test next. So that's how things are set up currently. Here's what we actually did. We attempted to be responsive by buying early on. As I said, we opened at 2701.50 or so. And then we got this strong move down out of range. Now, initially I learned, seeing as that we attempted to push up, right? We attempted to push up on this rotation off the open, which is what we would expect. We expect responsive buyers to come in and see these prices as low and to rotate back up. And then that failed, and it ended up pushing us out of range. And so to me, of course, the immediate read is, okay, we're getting initiative now. We're moving away from the prior range, initiative selling. So we're looking to sell whatever pullbacks for a continuation and start looking at the areas below 85.50 and so on. Not so. Just as it dropped on a big rotation down, it picked back up on a big rotation up, 11.5 points down. Big rotation back up brings us back into the opening swing where we started the day. So everybody's back on their heels. Neither side looks like it's winning anything at this moment. And then we start to drift down. And then finally we extend the range down. As soon as we extend the range down, we get this responsive buying, again, pushing us back into the OS. And then we get range extension up. So we just went neutral. The first real clue as to what's The first real clue as to what is likely to play out next comes right here. The test of mid from above after extending up. So we have a fresh extension of the high or the low against the prior day's low, and then it starts to continue and push through the IB, and that's the first indication that buyers really are tipping the scale to their favor. And then again, we push into 27.15, which was an area I was watching. 27.14 is where it turned. 27.15, and it rotates all the way back in to prior day's low. And then finally, we extend out to 26.25. 26.75 is the key low volume node from the prior day. What we saw yesterday, and by the way, we finished neutral extreme up. So we tested down. We tested below the low, below 2,700. If you look back in time, you'll see that we've had a hard time holding on. We're holding on to any prices below 2,700. We see buyers stepping right back in. If you just scroll back on a 60-minute chart or something, you'll see that it just dips and comes back up. Yesterday's auction, once it moved away from this low, finally the auction became more orderly. Until then, what we had is OTF battling each other all the way through the range, all the way through to here. We had OTF battle both ways. We had high volume all the way through. We had counter rotations all the way through, V bottoms, tweezer tops, all kinds of crazy stuff all throughout. And so I found it to be difficult to determine who's winning this battle here. Trade management was very challenging. But once it started to flow through and take out this 27.14, it became much more clear to me what's likely to happen. And the biggest setup of the day for me was this right here, this push into the stock zone against the LVN on exhaustion. I detail that setup again in the impromptu recording for Convergent members. I detail that setup and how that was taken. We talked about it at length yesterday. So yesterday was a really important day, in my opinion, because we watched as the sharks just fought each other. And we finally saw that buyers prevailed, that the low is in temporarily, and the expectation on a neutral extreme close is that we extend the high into Globex. And that's what we did. We extended the high at 37.25. The next big target up is 38.25. That is the most traded price from Wednesday. The market stopped short by 4 ticks. The point of control in the overnight session, 27.29, and the overnight low is just above that key 27.15. The overnight low is 27.16.75. So let's take a look at what happened overnight. I know I'm saying a lot and I'm speaking quickly because I want to make this as short as possible, but there's a lot going on yesterday. Yesterday was a kind of a landmark battle day for the low, and buyers prevailed, at least in the short term. So dead session early in the Asian session, then we get a pop, goes dead again. And then we get the European Open. We start to drift up, and then we're doing the same thing we saw in the U.S. session. We're doing that on the European session open, just testing both sides. You can see this big drop, and then we take more than 50% back of that, and then we come back all the way through where this drop happened. It's a battle on both sides. The volume in the overnight session is a little over twice the common volume for that session. So it's relatively active. We have about, 21 points of range, which is just stretching the first standard deviation into the second standard deviation of range for the overnight session. So again, that confirms that there's a fair amount of activity in the overnight session. There's a fair amount of participation. We expect that to carry over into today's session. Of course, today's session we had several, like I said, a lot of European releases this morning, GDP in the UK and so on, CPI in Euro, in the Eurozone. But we also had some US releases, personal income, PCE core, and then we get Chicago PMI, which for subscribers comes out at 9:42 Eastern, around 9:41, 9:42. Subscribers get it 3 minutes early. They get to trade it. We tend to see the reaction in the market, and then we tend to get it in our news feed at 9:45 when it's supposed to be released. And then we get 10 o'clock. We have University of Michigan confidence final. The final number generally doesn't move us as much as the prelim. PMI, look for 60 as the consensus, and University of Michigan confidence final looking for 99. I don't see any speakers on the calendar. However, the news is always the news. It is Friday, a summer Friday, so I expect it to quiet down around the European close, around 11:30 Eastern, 10:30 Central. But today, I anticipate that we are likely to rest up and continue to fight through Wednesday's profile. Let's look at what we expect for today. And of course, before we do that, let's take a moment and log into YouTube and hit the like button. Please hit the like button. I'm thinking of moving the Trader Byte to a different platform soon. Looking for solutions for that. You may not need to click that like button all that much, but I know many of you don't do it, but I'd appreciate it if you did. Just take a moment and hit the like button to support the broadcast. The like button gets me attention when I need it. When things aren't working well, although YouTube's been pretty solid. I haven't had issues with it for the last quarter or so. So that's nice. This morning we're looking at a gap up. The yellow line is where the market is trading currently. This line here, yesterday's highs at 26.25, 26.25, and we're looking at the market sitting right on top of the key low volume node and starting to push into the next key distributions from Wednesday. The template day very clearly is Wednesday. This morning, the expectation is for an open auction out of range. We are inside of Wednesday's selling range. Be careful here in this 29 area, but I'm looking for some response potentially into 22 or so, and then I'm looking for it to push out in an impulse higher, consolidate in this area, and drift up. I'm not looking for very much in terms of range, but I'm looking for this to drift up and continue the neutral extreme close that we had yesterday. I'm looking for this auction to continue higher, to form a channel pushing higher. Yesterday's battle was well fought. You can see a lot of wicks. We see a lot of wicks below, and ultimately resolved itself to the buy side. So we're looking at a strong potential of a continuation, but I'm also looking for responsive selling on the open to balance things out from the overnight session. The secondary scenario, no, that wasn't a threat that I'm going to stop doing the Trader Byte. It'll continue to be on YouTube for a bit. Just looking for a better platform. The secondary scenario, I honestly expect the secondary scenario to be an open auction out of range that is just lazy and keeps us going sideways for a while, and then I'm looking for it to just continue to drift higher. The range may be tight today as it sits between the key LVN at 2675 all the way up to 35. Just 10 points, 10, 12 points of range may cut us down today. That's the secondary. Okay. The tertiary, the third scenario, is a test down impulse up that takes us all the way to the prior day, to Wednesday's high. This is likely to be a news-based event, but if we drift down and we get a strong impulse early, look for it to test these stock zones and ultimately push into Wednesday's high and exceed that. Scenario 3 and scenario 4 is the opposite. The market gets news to reprice down, and the target would be 2703 in that situation. Okay, I know that's all over the place, but remember, we're at yesterday we were at an inflection point. We're pushing against this 2700. The OTF is in place. Just stop for a minute and look at the daily volume over the last few days since Monday. The daily volume has been really strong, whereas last week we had daily volumes of 800,000, 900,000, 600,000. Sometimes we're hitting 1.1, 1.3, 1.6 million. And so the higher time frame is involved, and there is a battle here. And so a lot can happen from this location. We're working hard. The ES is working hard to establish a swing low here. And we'll see. So far, so good. It's seeing some success. But if we get scenario 4, we start to fight and push back down to 2703, then we're likely to push through and start holding the 2600 century figure as our next range to trade, which I wouldn't mind. But that's how things are setting up. The bigger picture, we are still in an uptrend. And the market's showing relative strength. Okay? I'll leave you with those thoughts. It is Friday. Friday's not a good day to take big losses. Okay? So Friday is a good day to practice patience, to close out the week strong, and not to get emotionally involved with your trades to the point that you are just throwing whatever crap out there and hoping that you get paid. Just remember, trades that work out in your favor that you didn't intend, like taking a trade out completely out of a plan, or maybe you don't even have a plan, that ultimately works out. Those trades that you just fling at the wall, like poop, you just throw at the wall, like a monkey in a cage. When that works out, it is really terrible for your future expectancy. Okay, so don't pat yourself on the back when that happens. I'll admit I had the short yesterday, the mid short after the extension down. That was one of those trades for me. I told everyone that I grade that as a D- trade, even though it worked out. And I'm telling you, those trades are deadly because they reinforce behavior that is very, very poor and is likely to cost you in the long run. Today is a good day to just assess whether or not you do have a setup, let the market come to you, and then take the trade. And then once we take the trade, people, it is like the roulette wheel. And we don't know where the ball is going to land. It's a 50-50 chance, so better odds than a roulette wheel. Just let it play out. Let the market tell you what it wants to do. And if you use order flow and stuff, you might get clues earlier, but you might be in danger of over trading. Anyway, I'll leave you with those thoughts. Good luck today, and I'll catch you on Monday. Reminder, next Wednesday is Independence Day. Wow, I sound like the movie. Tuesday is a short day in the S&P. Tuesday's markets close at 12:15 Central, 1:15 Eastern. Wednesday, they close at 12. I'll be here Monday, Tuesday. I'll be traveling Wednesday, and I'll be here for short days Thursday, Friday. I'm going to take advantage to hear to see family. But remember, next Wednesday's a holiday, and Tuesday's a short day. So we have today, and we might see a dead market Monday, Tuesday, because for most people, you can get 5 days off for the cost of just a day and a half or so by taking off Monday and Tuesday. So it could be very, very slow, but I'll be here. Good luck.